Ladies and gentlemen, welcome back to the channel. Holy moly. We have a massive rumor to discuss in this video. Like, massive for markets, massive for Tesla. Yeah. Jerome Powell, just going to give it to you right from the start, is considering stepping down from the Fed. This is a rumor. I will share the details with you here in this video, the implications for markets, and much more. Beyond that, we really need to talk about Tesla today because look at the stock. It was up 1.17% today, following a 5% rally yesterday. But you know what actually happened today? Treasury yields on the long end of the curve skyrocketed because of Trump's tariff threats, because the 35% tariff on Canada. That is seen as causing more inflation, lowering the odds of rate cuts. A idiotic philosophy. Tariffs do not cause inflation. The only thing that causes inflation is money printing. Supply chain issues, we experienced that in 2020. That can also cause a bit of inflation, but it's not the inflation that you would think. The nuances of this get pretty complicated. But long story short, we had risk assets sell off today. Treasury yields explode to the upside. Yet Tesla was green? Doesn't make much sense. I'm here to put that into context. Why was Tesla actually green today? What does this mean heading into Tesla earnings? What can we expect after Tesla earnings? And the one big shift that we are about to see from Elon Musk. All of this and much more in today's video. But first and foremost, this video is sponsored by Verizon. Just playing. Video is sponsored by yours truly. Now, I want to just shout this out. In the trading community, linked down below in the description of this video, we have the most unique service that you have ever seen before. Because what we are doing is putting in the work, the time, the energy to find these small cap winners. The good small caps. Imagine that. Imagine if you could subscribe to a service and find the good small caps. Okay, the return potential is massive. Now, these investments we are taking are mainly in AI and biopharmas and other specific opportunities. I think there's some opportunities in some of the small cap Bitcoin, Ethereum, treasury companies as well. But we are singling out these opportunities and investing in them. We're looking for 10, 20, 30, 40, 50, 100x stocks. I think a wave of AI euphoria is coming. And if my playbook, my expectations evolve over the next 12 months, it's going to be even more than just AI stocks that do very well in a low interest rate environment, with a strong economy, with a competent Fed, let's call it, and many other building blocks to the bull thesis we will talk about here in this video. So I share my trades. I share my alerts when I buy, sell things. We do a lot of trading around earnings as well. But these investments, they're really like 6, 12, 18, 24 month time horizons. And they may or may not turn into long-term investments as well. Check that link out down below in the description of this video. You might be shocked with some of the stocks that we are uncovering before Wall Street ever knows what they're doing. I like to be first to things. See, I bought Apply Digital at $3. I bought IONQ at $7. In fact, I actually bought Palantir's IPO at $10. Sold Palantir far too soon. But I tend to be early to opportunities. Nebius at 17, Novartis at $2, right? The stock's at 7 today. I tend to be really early to things, but not wrong. Knock on wood. Okay, so come join that if you guys would like to. Link down below in the description of this video. That is today's sponsor. And let's go ahead and get started. So first and foremost, guys, okay. Woohoo! This is good stuff. This is really good stuff. FHFA chair Pulte, basically the guy that runs Fannie Mae and Freddie Mac, okay? He says, I'm encouraged by reports that Jerome Powell is considering resigning. I think this will be the right decision for America and the economy will boom. Okay, so here's the deal. Powell was caught lying in front of the Senate Financial Committee, okay? Caught red-handed. I think it was more of an ignorance thing. I think Powell thought one thing about the budget for the renovations at the Federal Reserve, and it was actually another thing. So I don't think Powell was like consciously lying. I think he just kind of got caught up and didn't really understand the entire budget for the Federal Reserve. If you don't know, construction has been underway for the better part of the last 18 months, and it's running way over budget. He was basically questioned on that to save you the details, and he said, nothing's changed. Those reports are basically not true, and that was a lie. Like, you know, it's the same. Like, Powell should have known that, okay? So I think it was more of an ignorance thing, but that is grounds for what, you know, a lot of people would call a chair resigning, although it is arguable, again, because I think it was more of an ignorance thing, not just an outright lie. Now, if Powell were to step down, things would get interesting for the markets, and we'll discuss this more if it actually happens. I personally, I'm split. Like, Powell should probably step down. Is he going to? Would his ego allow him to? Hell, does he even want to be at the Fed anymore? Like, would you want to do a job that everyone hated you for every day? Like, it's difficult doing that. You really got to love what you do, even making YouTube videos. Like, half of you guys completely hate me. I mean, you got to love what you're doing to continue on that path. Okay, so it could create uncertainty. It could create some volatility in markets. But again, with a new Fed chair, that means more cuts sooner and less of a chance that we go into a recession. I don't think we're going into a recession, but a new chair, a competent chair that could lead the Fed in the right direction to cut rates would obviously be good for risk assets. Okay, which a risk asset is really any stock. Anything can be considered a risk asset. I like to call them risk on assets. So like the Russell and small caps and Tesla. Okay, those are risk on assets where risk, people look to get some excess return. Okay, now that leads me into the next segment of this video. What happened today for Tesla? Now, there was news that Tesla is expanding into the Indian market. I think, expanding into the Indian market, it's great. It's going to take some years for that to be substantial to Tesla's business. I think Tesla stock today actually responded to, in my opinion, if they're entering the Indian market, there's really good odds that a cheaper vehicle is coming. Okay, really good odds, because how many Model 3s or Model Ys or long ranges or Model S, X's or Cybertrucks are you really going to sell in India? I mean, it's a developing nation. It is a lower income nation. Buying a Cybertruck would be like the average person in America buying a Lamborghini. Like, it's just out of reach for most people, for like 90%, 95% of average people. Okay. So I think that's actually what moved the stock today. Now, what's fascinating about this is the markets had a risk on sell-off, okay? Treasury yields skyrocketed today, again, on the philosophy that 35% tariffs on Canada are going to cause more inflation. That's going to cause the Fed to not be able to cut rates as soon, and, that's bad for risk-on stocks, right? Less cuts. Well, if that wouldn't have happened today, Tesla probably would have been up over 5% today. Despite that risk on sell-off, Tesla was still in the green. I find that an incredible show of strength from Tesla stock and from the bulls. Okay, because treasury yields were up like 7.5% earlier today, and the Russell was down over 1%. Typically on days like that, like, to see Tesla down 5% is really not abnormal. Okay, so that's important. I think today was just a really solid sign of strength from Tesla. And it makes me excited for what is to come. Now, let's pivot again. Earnings, Tesla earnings specifically. Not next week, but the week after. It's going to be huge. It's going to be a huge event. And there's really two parts to what's coming next in the coming months for Tesla. One part is earnings and expectations. The next part is Elon Musk. Okay, so let's start with earnings and expectations. There's two things that really matter for Tesla at this point. The Model Q, is that still coming this year or not? Okay, I would say, like, based on what the stock is pricing in, it's like 50-50. I think if Model 2 is delayed until 2026, it's kind of priced in, not fully. That would be a downside catalyst. If Model 2 is coming this year, again, that would be an upside catalyst, but it's kind of already expected. Like, it could go either way with that catalyst. The most important part is AI and robotaxi and scalability. How is that going to scale? And here's where the big upside potentially comes in. I can sit here and confidently tell you that Tesla's stock is not actually priced for 20,000 robotaxis out on the road next year. Like, nobody is modeling that. Nobody is investing in Tesla for that. So if we get a really good guidance number, 5,000, 10,000, 20,000, 50,000, hell, Elon could say 100,000 robotaxis out on the road next year. That is the massive catalyst for Tesla. Okay. The stock is probably priced for a couple hundred robotaxis out on the road next year. Like, if we were to hear, we're going to have a couple hundred robotaxis out on the road next year, 2027 is going to be the year of real scalability. Earnings is not going to be nearly as great as a lot of people want. Okay. So that's number one. That's the first thing to know. Second thing to know is what I've said on this channel now a couple of times, but I think is critical that everyone understands this. Elon Musk does not want Tesla's stock at $600 per share. Elon Musk does not want Tesla stock at $400 per share, much less 1,000 or 2,000 or higher than that. I'll tell you why. Because the board is currently discussing its compensation package. So put yourself in Elon's shoes. Would you want the stock at $300 or $600 if your boss was discussing your performance-based compensation package? Okay, you would want the stock as low as possible because, for an example, Elon's first tier of his compensation package might be if the stock hits 2 million deliveries and a $2 trillion market cap. Okay. Well, if the stock is already at a $2 trillion market cap, your first tier is not going to be at $2 trillion. It's going to be at $3 trillion or $2.5 trillion, something along those lines. So the lower the stock, the better for Elon at this point. The law of large numbers states that it becomes more difficult and more difficult to get outsized returns and outsized growth the larger the business becomes. Same is true for, again, a stock going up or for a performance-based compensation package. That's why, in my view, Elon is not working for Tesla's favor at this point. He's not necessarily trying to cause the stock to crash, but he doesn't give a crap what happens to the stock. You see this with politics. He's going to say what he wants to say, and who gives a crap, who loses money or what, okay? When Elon has a compensation package, which it could be announced this earnings, since there was a special committee set up back in April to come to a new compensation package, most likely on November 6th, you're going to have that unveiled on the shareholder meeting. That's when Elon is going to decisively stop the BS. That is when Elon is going to be your biggest tool in Tesla stock to get the stock to move higher, to cause excitement and enthusiasm for the future. Okay, mix that with scalability of robotaxi, with a business that is rolling out the Model 2, which should drive better deliveries, energy storage that is on fire, and a general euphoria I see coming with AI technology. By the end of this year, I foresee a Tesla stock that is much higher than where it is today. I will hold true to my call. I think Tesla could be a $600 stock by the end of this year. But again, you need good guidance from Robotaxi, and you need a compensation package for Elon as soon as possible. If it comes this earnings, that's great. If it comes November 6th, you could still see $600 by the end of this year, but it's just a little harder because you have less time on the calendar. Okay. But once those two things happen, we get good Robotaxi guidance that Wall Street is currently not expecting from Tesla, and Elon gets his compensation package. Those two things together is like fire and gasoline. Now, let's pivot a little bit. Keep all of this in mind. It's going to roll together. The broader markets. I've talked about this before, and I plan on making an in-depth video on this topic. There's a lot to cover, but just looking at the broader markets here. Geopolitical conflicts coming to an end. Okay. Tax bill is over with. Now, with the tax bill, you have massive deficits. Long term, not great. As long as it does not disrupt the bond market, in the short term, the deficits are actually stimulative. Like, if we want to talk about inflation at all, it could come from government spending, not from tariffs. Topic for a totally different video. Okay, so there's that. Tariff deals, trade wars should be over by the end of this year. Okay, hopefully by August 1st, we have a better than expected trade environment. Okay. We're not going to have inflation from tariffs. I've explained this many times before, and I think we all understand, so I'll explain it briefly. Tariffs are a tax. They do not cause inflation. It's as simple as that. The only thing that causes inflation is money printing, whether you want to look at Rome or you want to look at Korea back in the day, or you want to look anywhere else. Look at COVID. It's money printing. We could have had supply issues, and we may have had, temporary inflation. But what that would have done is just cause a recession, right? Because people would have all of a sudden not been able to buy things as prices go up. Like, companies would have got screwed. Economy would have been screwed. I don't know what's better or not. I think a little bit of inflation is probably better than a recession. I say a little bit, but it was either deep recession or inflation, okay? Which, I guess inflation for asset owners, stock owners, homeowners is a good thing. So I'll take inflation over deep recession any day. But again, it was money printing. We're not printing money. The deficit, yes, could be inflationary. Tariffs are not, because consumers will not pay the higher prices. I don't know what Wall Street thinks like Main Street is like. I think they're so disconnected from Main Street. They don't even know enough people that work average jobs to understand financial situations of average people. There is not a slush fund of money out there where companies can just go out and raise prices. What will happen is some companies may have to raise prices. As I actually made a whole video that had that weird audio, like spatial audio, so it came out weird, so I'm actually redoing it. Think about it like this. In the other video, I used this as an example. A shoe, okay? Say this company is heavily tariffed. They try to raise prices of this shoe from $30 to $50. Great. Well, not so great. People may still pay it, but you know what's going to happen in a capitalistic world is another company that is not as heavily tariffed are going to come out with a $30 shoe that is of similar quality. And what do you think is going to happen to the brand that raised prices? Well, you can only make a shoe so good. Okay, your brand only carries so much weight. You're going to lose market share. You're going to lose customers. That's not good for your business. Okay, that's the capitalistic dynamic of this country. That's why TVs have gotten cheaper and better over time. That's why computers and cameras have gotten cheaper and better over time. If you can innovate and make something better or undercut the next guy with a better, cheaper technology, you're always going to win. That's why you don't tend to see inflation in capitalistic economies unless there's a slush fund of money out there and people are okay with paying higher prices. Let me ask you, if you got a stimulus check today that hit your bank account as extra spending money, You may not care if the shoe went from $30 to $50 or from $30 to $35. But if you don't have any extra money, you're in the same situation financially as you were yesterday, you're going to care. Okay, I see the pushback from consumers everywhere I go on prices. So these 4 things, okay, geopolitics coming to an end, trade deal coming to an end, you're not going to have inflation, and they say trade deals, coming to the budget, okay, budget deficits, all of that, pros and cons that come along with it. But overall certainty is good. So those are 4 things that are abstractly, in my opinion, bullish. I think the economy is going to hold up because we don't really have a shock event at this point, besides the China tariff embargo, which was kind of a shock event, doesn't look like is pushing us into a recession. Now you have what could be 9 to 10 rate cuts next year, with a strong economy, with no inflation, with a lack of geopolitics and wars. That is a very positive fundamental backdrop for markets. And the 7th thing is AI. AI is going to change the world more than you believe, more than I believe, more than anyone believes. And Wall Street is very much not participating in this rally. They're going to have to. They're going to have to get allocated. They're going to have to get invested. That's why I think you're going to see a massive chase with a ton of euphoria. Now, with rate cuts and all the other backdrops, I think other stocks can do well also. Think of this kind of, in my view, like a 2021 market without the zombie companies doing well. I think bad companies are going to do bad, but the good ones, which is honestly a good chunk of this market, they're going to do exceptionally well. Like the companies we are investing in the trading community. Link down below in the description of this video. I think those are going to do exceptionally well. Not just AI names, but I think the focus is going to be on AI. I think the application is going to start to shine next year. And I think specifically for Tesla, it's really going to shine. Like the scalability of Tesla's AI is unlike any other AI company in the world between Optimus and Robotaxi. It is unmatched. And I think, again, you can look at NVIDIA. NVIDIA's priced in its AI potential so far. I mean, it's seen good results. Microsoft, Meta, like these companies have priced in to a certain extent what their AI roadmaps are going to look like. Tesla has not priced that in. If that were the case with total addressable markets the size of Tesla's, I think the stock would already be in the 600s. Okay, yet you have Elon's politics and a lack of clarity around what AI scalability is going to look like at Tesla. So I think these issues come to an end here very soon. This earnings is critical. Jerome Powell, Elon Musk getting a compensation package is critical. And having this broader economic backdrop that really starts to improve heading into 2026, it's hard for me to come to a bear thesis on this market broadly, and it's even harder to come to a bear thesis on AI. I always try to challenge my theses, and right now it's more difficult than it's been in a long time. The only thing that I can think of at this point, minus any black swan events, of course, things can happen that are unforeseen, but minus any black swan event, it would be like the economy weakening too much and there being a growth scare of a recession. But honestly, like some of the things in the BBB, Big Beautiful Bill, are very positive for the consumer. Like no tax on tips up to $25,000. That saves somebody working, let's call it 9-to-5 job, $5,000 to $6,000 in taxes a year. Where do you think that money's going to go? They're not going to save it. They're going to spend it. Okay, that's the simple fact. No tax on overtime up to $14,500. What do you think they're going to do with that extra money? They're going to spend it. Okay, so interest rates come down. Home prices have record levels of equity. People can start to sell homes again and take hundreds of thousands of dollars of equity to their bank accounts. What do you think they're going to do with it? Spend it. I think these are things that are really underlooked at this point that may help the underpinnings of this economy. And to be honest, I think the average American has been in a recession for years. So if we can start to improve the overall backdrop of the consumer, which I think could start to play out into 2026, that just furthermore helps the bull thesis. I find it very hard to, see a dramatic weakening in the economy. But hey, the next big catalyst for markets is going to be next week. The CPI report coming out on Tuesday is the first month we're expecting tariff inflation to hit. Not weird, but like Wall Street and the Fed and certain politicians are expecting that inflation to hit. I don't think that is going to happen, okay? We're probably going to come in with a low number, and that's going to be seen as great news. I think that could be the moment where a lot of Wall Street needs to wake up to the fact that tariffs are not inflationary, okay? So that's great. And here you can see, again, back to the whole Powell thing. The U.S. Federal Housing Agency issued a news release that he's considering resigning. So again, that could be a little turbulent in the near term, but could be great for markets. Now, Chicago Fed Goolsbee says new tariff threats could delay rate cuts, spark inflation concerns, insists the Fed will remain independent despite political pressure. These guys are so incompetent. You gotta just look through it, okay? You gotta look through it to when Powell's gone, when some of these Fed officials get replaced. I believe 2 other governors get appointed next year. Could be wrong in that number, but I know it's a couple of them. And we're just gonna have to wait for the data to show that there's no inflation from tariffs. That's the unfortunate part, okay? Takes a little bit of patience here, but I do think we are in for one hell of a market rally into the end of this year. So again, let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. Tonight, I'm actually going to be posting the full due diligence on Tesla, my long-term thesis on Tesla, why I'm so bullish on Tesla, and my positioning. So if you've ever wondered how much Tesla do I own, yes, it is my largest position. I will tell you that. Check out that link down below in the description of this video. And again, it's a very unique service. We're really looking for outsized returns. I believe this is a once in a lifetime opportunity, much the same as the early days of the internet was. That opportunity is long gone, okay? The early days of the internet, that was 25 years ago. The early days of AI, the next biggest revelation or revolution in investing, in productivity, in enhancing the human experience is AI. I will not look back 10 years from now and say I missed it. 25 years from now, I'm going to be rich because of it. And all of you guys in the trading community will be as well. And hopefully as many of you guys as possible will be also. You're on the right track. You're in the right area. Just takes time and a little bit of patience. Diamonds are not made overnight. It takes a long time, a lot of pressure, a lot of heat, a lot of blood, sweat, and tears. That pressure creates diamonds. And no matter what happens, don't fold to the pressure. Don't let your emotions take over your otherwise good judgment on your portfolio. So again, let me know your thoughts on this down below in the comment section. Links for everything down below in the description of this video. Have a great rest of your day, and I will see you in the next one.